Right, shall be talking through Beyond Meat and Tattoo Chef. As you can see, both of these companies recently launched, and as a result of the coronavirus pandemic, this has become a popular staple in our food. Okay, so Tattoo Chef, TTCF, started with the aim to target the organic ready meal and staples markets, while Beyond Meat is going after the plant-based meats. So which is a better buy? So Tattoo Chef initially started as Taylor International, following a reverse merger with Foreign Merger 2 Corporation, which is a SPAC, to form Tattooed Chef Incorporation in October 2020. It's a boutique food company that specializes in providing plant-based and completely organic foods to consumers. The company's product portfolio includes ready-to-cook and ready-to-eat meals. They have essential ingredients like plant-based pasta and pizza bases. Beyond Meat, on the other hand, is also a plant-based meat producer based in California. The company is founded by CEO Ethan Brown in 2009 and officially took its products to market in 2012. The products are designed to mirror the taste and texture of popular forms of meat, such as chicken, beef, and pork. The company went public via IPO in May 2019 and has become, since, of course, a stock market darling, as it's been up 135% in its IPO price. So now let's look at the similarities. So both companies are the future of the meat sector due to a rise in climate awareness and action. They're both boutique FMCG, which is the fast-moving consumer good companies. Both are looking at capturing the niche markets of the food sector, and of course, they want to become major segments in the future. Now let's look at the business model for both of them. Okay, the coronavirus pandemic has proved to be a huge boom to both companies. Tattoo Chef in this case, of course. Tattoo Chef has seen a significant boost in demand for its ready-to-eat and cook products as consumers were forced to eat at home due to lockdowns, work from home, and general fear of contamination. Tattoo Chef is currently working on two goals: expansion of products, reach, and higher profit margins. The company is currently selling products to private labels, making it more of a supplier than a food brand, and it aims to gradually shift from private label to own brand, which it hopes will increase brand recognition and reputation, and eventually lead to fatter margins and higher valuation multiples. So to expand its products reach, the company is confident that it can be in 50% Walmart locations in the United States. While speaking of Beyond Meat, of course, to expand its product reach, the company is confident that it can be in 50% Walmart as well. And it's been up 7% currently, which is about 4,900 new locations for consumers to purchase the products. The company also recently launched its own direct consumer sales channel in the form of an online store, which is a platform to sell products under the newly developed own brand. The virus also played right into Beyond Meat's hand as consumers were forced to turn to plant-based meats due to big disruptions in the meat sector chain and a large number of contaminations at major meat processing plants. Beyond Meat produces plant-based forms of chicken, pork, and beef. The products are designed to align with the biggest reasons behind meat aversion. The company claims that its product is much healthier and easier to digest, while being as close as possible in terms of taste and texture. Beyond Meat produces its products in the United States and is in the middle of an international expansion. The company recently signed a deal for a co-manufacturing facility in the Netherlands with Zandenberg and recently announced plans to build two factories around Shanghai in China, which is one of the biggest meat factories in the world. Beyond Meat has a first-mover advantage in plant-based meats. In the United States, the product is available across the country at all major retailers and online. The company has also slowly made its way into the menus of the restaurants and some fast food chains. Beyond Meat's its more successful products are plant-based meats, beef and chicken, that are available in convenience forms like patties, sausages, and minced meats. Now let's look at the financials. Tattoo Chef has 1.2 billion market cap compared to the market cap of 9.8 billion with Beyond Meats. The revenues of 33.17 million and 34.76 million and profits of 4.88 million and $916,000 respectively in the first 2 quarters of 2020. The preliminary Q3 revenues of $41 million and expects full-year revenues to be $148 million with an adjusted EBITDA of $17 million. On the other hand, Beyond Meat have revenues of $97.1 million, $113.3 million, profits of $1.8 million, followed by a loss of $10.2 million in the first 2 quarters of the year. Beyond Meat announced preliminary Q3 revenues of $41 million and expects full-year revenues to be $148 million with an adjusted EBITDA of $17 million. Tattoo Chef's currently trading at an EBITDA of 30 times. Over the last year, the company has increased its EBITDA margin to 11.6% from 8.2%, which is an increase of 40%. Beyond Meat is currently trading at an EBITDA of 1,180. Management expects the Tattoo Chef's margins to expand to 13.2%, which is an increase of 14%. On the other hand, the gross margins for the 2 quarters for Beyond Meat was 38% and 29.7%, which is 34.9% when you adjust for COVID, respectively. Finally, Tattoo Chef prospective investors should note that the figures could see further and substantial improvement under the company's own brand, and likewise for Beyond Meat. Now, the bottom line is that both companies look great on paper. Beyond Meat is now fighting strong headwinds. As you can see, McDonald's on the 10th of November released a statement that they are entering the fake meat game, and just that alone could push the Beyond shares under $100. It's a risk, of course. Beyond stock lost about 10% on Monday, which was the 9th of November, but this is correct as at 10th of November, 2020, after they delivered the poor earnings. Tattoo Chef, on the other hand, survived the McDonald's news, even though it's still losing presently as well, but it's not as heavily as affected by Beyond Meat. And this is correct as at 10th of November 2020, but showing that they are in the niche of their own, as well as they delivered a positive earnings. Finally, you can see the chart for Beyond Meat on the left-hand side and Tattoo Chef on the right-hand side. With the markets closed on the 10th of November, Beyond Meat tanked about 17%, while Tattoo Chef was affected almost 14%. On a final note, Tattoo Chef is not a clean winner, but the quarterly financial results makes it seem deeply undervalued. And based on Beyond Meat's multiples, personally, I would go with Tattoo Chef, which I think should be a $40 stock with a fair value of $25. For more videos, subscribe to the Wealth Hackers platform on YouTube, or you can find me on the Wealth Hacker, which is on Twitter, or finally, Instagram, the Wealth Hackers. Thank you.